putting the banks in a position where they only have to focus on being client-centric and then literally supporting them with various range of services.
Hello, and welcome to the final chapter of the Bankers Masterclass series in association with Saxo Payments, looking at how banks can use utility banking to drive forward innovation in financial services. I'm Joy McKnight, Deputy Editor of The Banker, and I'm joined by Anders Lacour, co-founder and CEO of Saxo Payments. In Chapter 4, we're looking at how a financial utility could allow banks to focus on customer-centric offerings. Anders, thanks so much for joining us.
Thank you.
So how would you say the regulatory environment is really pushing banks to unbundle their products and services?
I think, again, what we've seen over the last 10 years has been a push from the regulators to increase competition in the financial industry. Part of it is like the larger banks has to do ring fencing between the retail side and the investment side. And again, that push has created innovation because it's allowed the financial tech industry to evolve and literally offer products and services that are much more niche focused than we've seen over time. Again, that unbundling of the banks will, in my opinion, at a later stage, lead to a rebundling where the banks will, in a much more agile way, be able to deliver focused services towards their client base, but focusing much more on the product and delivering the product and having the client relationship while not spending much resources on core banking outside the domestic core.
Okay, but how will this really impact a customer-bank relationship, do you think?
It's a very, very good question because I think it depends on whether you are a large bank or a smaller bank or a fintech. Because if you're a fintech, all you would like to do is keep the client relationship. That's your primary purpose, or at least a traditional fintech. If you are a larger bank, you might be able both to hold the client relationship and own the core banking side of it. If you are a smaller bank that does not have a large scale, then you'd have to make a decision whether you would focus on the core banking side, also outside your domestic core, or on maintaining the client relationship. My bet is that the vast majority will focus on the client relationship because the client relationship is the profitable side of the equation, while I would expect many of the core banking services to turn into commodities over the next decade.
So how can banks successfully retain that client relationship in the face of innovation?
I think what we'll see many of the banks do is to focus their innovation and their core focus on the client relationship, holding the client relationship, building the client relationship, and then literally doing this at the geographical core with a broad palette of products and services, literally rebundling again. I think also, at least over time, we might see a trend where a lot of core banking services will be given away for free, and then all the associated services will then come with a certain price or price tag. And it'll be very, very interesting to see. I don't have the answer, but at least I'm quite convinced there'll be a trend focusing towards a broad palette of services in the digital age, focusing on maintaining the client relationship.
Okay, but how can, let's say, an industry utility really help banks maintain that customer relationship and develop new customer-centric offerings?
I think what an industry utility like the banking circle can do is putting the banks in a position where they only have to focus on being client-centric and then literally supporting them with various range of services. It could be payments, it could be lending, it could be trade finance service, and literally allowing them to solely focus on the client relationship. And I think that would be needed, at least for many of these, especially the smaller banks, to survive. As we've talked a lot about the fintechs, and the fintechs will definitely and is putting pressure on the banks. But the larger tech businesses, like especially Amazon, Facebook, will also come into this market, because if you hold the client relationship, it's a natural evolution of your business to start doing that. We've already seen Amazon and Facebook start delivering SME lending, and I'm quite convinced we'll see additional tech platforms move into this space.
Okay, so my last question is really the $50 million question, which is what will the future of banking look like?
I think it's always hard to predict what the future will look like. I think we can look into some trends and tendencies that I'm quite convinced will be part of shaping that future landscape. And I think one of them is the creation of the global digital market. That if you have a global digital market where the most important thing is to hold the client relationship, then you would eventually also see a much more fragmented banking market where a bank can be a traditional bank with a traditional banking license, but it could also be a fintech business with or without a banking charter. Klarna in Sweden is a good example of a fintech business with a banking charter but still operating much as a fintech. And then again, you could have Amazon or any other tech business moving into that one. In my opinion, much more fragmented with networks, platforms, traditional banks, and newcomers in the market, all to deliver financial services to its consumers and corporates. And eventually, that will benefit the consumer or the corporate because it will increase competition. And that's at least the trends and tendencies that I would see in the market going forward.
Excellent. Thank you so much, Anders. Many thanks for joining us for this Masterclass series in association with Saxo Payments.